Good morning, everybody. Welcome to the Game Plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com, and we have a lot to discuss. Markets are in free fall. They've come back a little bit off of their lows, but ultimately the tariffs are the issue here. All right, so again, tariff date, which is again the 2nd of April, is approaching. Trump yesterday talking about more blanketed tariffs over every country out there, and that has sent the market into a panic zone. All right, follow me over to the big board here. Let's take a look. What we have here, guys, is the S&P futures. And again, what we have is the market on Friday. This is the market on Friday, right? We knew we had a huge down day. After hours on Friday, basically flat. And then this morning, even more downside, coming back just a little bit here in the early action. But if you look at semiconductors, if you look at pretty much everything, there is massive downside. As again, the worry is these tariffs are going to cause inflation to uptick. We saw the PCE last week, which was already a little bit higher than expected based on the core numbers, which is without food and energy. But then you throw in the tariff implications going forward in the PCE numbers, and inflation pushes up. In addition, the stock market is now coming down. That makes the wealth effect into a reverse wealth effect and has people slowing the consumer spending. All of these make up stagflation. Stagflation, the worst scenario of all. All right, so what we have here, guys, is a market that continues to be under pressure, coming back just a little bit. But I always say this, guys, remember this. The key is when you get panic, you look for good quality names at key technical levels, and you play swing trades. In other words, selling and massive panic in markets can breed opportunity to the right traders who look at the right things, and that's what I'm here to do with you guys. All right, let's flip over here, guys. Let's flip to our daily S&P chart. This, again, this level pre-market is what we're hovering right around right now. Now, this is your former low going back to early March right there, and the pre-market data is showing us we're right on that level. Now, should that work as a little bit of a short-term support? It may, but it's not a long enough level, just a good technical educational tool. If you have two levels, all right, so here's a pivot low and here's a pivot low. Is this double bottom? Let's say the price went like this and then came in here. Is that stronger, or is this stronger? It would have double bottom from that distance, right? So if you go up here, you go here, you go here, you go here, let's say you come down there. Which one's stronger in technical analysis? And the answer is this one. The longer the pivot lows are away from each other, the firmer this becomes as a technical support. So it's not to say you can't get a small bounce here, but when you look at probabilities, the probabilities of a bounce here off of this bigger one are probably, let's say, 65 to 70%, right? Over here, probably 55% at best, maybe 50-50, right? So again, the idea is this concept is very important when looking at major pivot lows on the chart. Okay. The other thing I'll go over, and I'll just throw in some extra education today, then we'll get back to the charts. But when you have a trend line that's upsloping, what we know, and by the way, this is a great example of this one here, right? Upsloping trend lines where price is bouncing on them like this, they eventually break to the downside. I would say about 8 out of every 10 times they will break to the downside. In fact, it might even be higher than that. What you look for is you look for generally it's at least 3 hits that cause a bounce. So 1, 2, 3. These usually cause bounce. By the 4th, it's about a 50-50 chance of a break, right? So 50-50, and then by the 5th, it starts taking over to like 60-70% chance of a breakdown. So these little things, again, these little nuggets of information will make the difference between a great trader and a mediocre trader or investor. Understanding these simple things. Okay, so what do we have here? We have the market that, again, hammered here, and if you bring this line back, it was easily like 4 or 5 hits over here where it finally broke, right? So the methodology holds for the S&P 500. We had the waterfall event the technical bounce. Now we're retracing. We have to see, are we going to do this and then break, or are we just going right through it? Those are the two scenarios that are most probable right now. I would guess, and again, guessing is never a great way to do it, but if I had to just know my probabilities, I would favor a small bounce, maybe tomorrow or later today, on the back of maybe people panicking a little too much over the uncertainty of tariffs, since we're going to get clarity tomorrow going into April 2nd. But then eventually, either way, the economy is slowing. And what do we know about the economy, guys? The economy, when it slows, what does that do to corporate profits? If people are pulling back on spending, corporate profits go down. Right now, you've had stocks priced, like semiconductor stocks. They've been priced as if these good times will roll forever, and there'll be unlimited amounts of money to be pushed into these things, just like goods and services, etc. That's not the case when the economy slows down. So a repricing in stocks is underway right now. We knew it started when we broke this key level right here. All right, follow me back to the computer here, and let's go through a few other charts. Number one, let's take a look at the charts here and see what we have. Number one, we have the chart of the QQQ, and the Q's right here. Again, if we look at the pre-market data, look, we're below the trend line. So it just shows you that the NASDAQ is weaker, right? Because the S&P pre-market is right at the double bottom. The Q's are actually trading below. Now, again, the question is, do we flush down on the QQQ? The next major support on this is down here around 449 and change. So see this little pivot low here? That's going to be your first level. The big one, though, and this is where I would expect a bigger technical bounce, would be the August low. Remember how big of a sell-off that was? We came in on Monday morning right here. The markets overnight were down as much as 5% on the NASDAQ. We opened and then just rallied straight up for the next couple of weeks and eventually made new all-time highs. This one, look at the distance. Long period of distance from here to here. We should, if we were to fall into this would be a fantastic potential swing trading opportunity. Now let's flip over to Nvidia. Nvidia is rallying a little bit off of its lows, so that's a nice bounce. But again, this is a stock that has, in the short term, fallen from a beautiful chart. In fact, let's go talk about this on the big board. Follow me back to the big board here as we jump over here, guys. So again, we can see what's going on here. You can see that, again, we have the line here, here, and here, right? So remember the methodology that I just taught you guys about how many hits in general and what the angle of the trend line tells us. So this is an upsloping trend line. What did we just talk about upsloping trend lines, right? Up, and then eventually a breakdown. So that's the number one. And then the number two is, notice how many hits you had. 1, 2, 3, 4. 4 was 50-50, so it could have gone either way. By 5, it's favoring the breakdown. On 5, what does it do? It breaks. Now, the next thing is, when you break a major trend line, there's a bunch of investors that have been, they don't really see the trend line. Most, by the way, if you're watching this, congratulations, because most investors have no clue about trend lines, right? They don't know technical analysis. They don't know any of this. But psychologically, this holds true. In general, when you break down, there's a buyers that were waiting for those lows, and they start to say, oh man, you know, I'm sure Nvidia will go back to its all-time high, so let's jump in here, right? So they're buying down here, and it starts to bounce, which coaxes more buyers in. It goes right back to what we call here the scene of the crime, and that's where it gets rejected. So if you extend this out, what happens here and then there, right? So that's the idea behind it. And so you can see how, again, the things that I'm teaching you today, we can literally put them into real life charts and see how they work. And I always am big on that. I always say to people, don't trust what I say, verify it. All right? You know, because listen, if we all trusted everything we heard on TV or in the media or everywhere else, we'd really be misled, right? So I always say, listen what I have to say and then verify it for yourself. And if it works, it works. If you say, oh, it's a bunch of hooey, then throw it out. That's okay, too. Okay, so that's where we are on Nvidia, guys. Nvidia, yes, there's a chance of a double bottom bounce here at 104 and change, just below 105. Technically, it already hit that pre-market. I'm not a big fan of those levels unless it's a quick day trade. But ultimately, where are the next levels? Well, the big one is going to be your August low down here, which is around 90 to 92. That's going to be a major technical level. I'll be eyeing that. But again, keep in mind, and we'll walk back to the computer here, but But in general, yeah, I mean, this is some wild market action. And like I said, this breeds opportunity, right? So again, I love volatility. I love markets like this because it means that if we flush a huge amount, the bounce, and if I can find the levels to buy, the bounces can pay us out handsomely, literally in days. Like people that make 10% on their portfolio a year, which is like the standard stock market, like you can make that in days on certain stocks that are good quality names by picking them up at key levels after a flush. Another example of that, if we flip over here, we had Tesla, right? So if we look at the chart here on my computer, we can see that Tesla had this big fall. And remember, I was telling you guys, literally, I was like, guys, this is a huge level on Tesla. You got to buy Tesla. We bought it in the smart money stocks and ETFs. And then look, literally bounced. If we do our measurement tool here, you can see that again, from this low to this high, 27% bounce in a matter of what, 3 days, 4 days, 5 days? I mean, that's incredible. Now, it is retracing, and if we look at the pre-market, it is under pressure. So again, Tesla continues to be under pressure. You might say, well, would you rebuy here? No, I don't like second or third hits afterwards. Why? Because we know the methodology. Once you get more hits, this line weakens, and the probability starts to grow of a breakdown. Now, listen, it's only hit once, twice, so you might get another bounce here. But for me, I start turning my attention to a lower level. Bring this trend line down. There's a gap fill just below at around 213. That one hasn't been hit yet, and I would be intrigued if we flushed straight down here into this 213 level. Microsoft is coming in. Look at this high pivot. This low area right here, we can clearly see it hovering right here. It should get a quick bounce off of this level. But again, if we look at this, broke out, 1, 2, 3. So yes, a quick bounce, but then I think it actually goes lower. So just be aware, a lot of these charts, if we're talking about buying, they're short-term trades. Here's another one. This is actually one of my favorites I'll be watching today. Alphabet at 151 to 149, gap fill, pivot low, double bottom. Again, 3 bars down in a row. Today will be number 4. If it gets below 151 into the 150 range, I'm going to start nibbling on a swing trade here. This should be a good bounce level for probably, I think, 8 to 10% in a matter of potentially a week or two. All right, let's flip over to Bitcoin here. Bitcoin again, we can take a look. And in fact, what I'm going to do is I'm going to zoom out here again, guys. So let's go back to the big board. Follow me over to the big board here. Okay, and what we can look at is you basically have a chart where, and I want to show you this again, right? So if we look at this, here's your double top going back, or your high pivot going back to March of 2020, right? So let's just say this is a 1 hit, 2 hits, 3 hits, 4 hits, small check back breakout. You see that? So 1, 2, 3, 4. Notice how 4 is just a small check back. That's very common. The 4th is 50-50. So a lot of times you just get the small pullback and then the breakout. So I just wanted to show you guys again how this continues to play out. And by the way, you could almost make a case for that right in here too. 1, 2, 3, 4, breakdown, right? So again, it just over and over replicates. It's very cool. You guys start getting your trend lines down, you could really make a lot of sense of the market. And by the way, it doesn't mean that something can't bounce on the 5th hit or the 6th hit, though there's always outliers, right? That's what probability is all about. It says, okay, it works 70 or 80% of the time, but that's 20 to 30% of the time that it doesn't work. Okay, in any case, we had this downsloping trend line, this upsloping. We talked about this little wedge pattern forming. We obviously know the breakdown occurred. We are now below this level. It continues to make me think, and I've been steadfast on this, is that, listen, we're stuck between this level and this area right down here. And inevitably, support needs to be tested. All right? It's just, again, it's a probability based, but I would say about 80% of the time when you're hovering between two levels, even if you're going to eventually go higher, technically speaking, resistance got tested here, you didn't test support, it's going to want to come in here, and then maybe it can go like that, but it needs to kind of find the floor. It's got to have its feet on the floor before it can jump up again, and that's the thought process behind that level. So I'm still in the camp that Bitcoin goes back to about the 74, 72, maybe even 70,000 level. As of now, would I be nibbling there? I might be nibbling there, but again, I think the key here is you got to watch the stock market. And again, I've said this from the very beginning. And in fact, even a year ago when we were watching, or last year when we were watching Bitcoin rally up, I said, guys, as long as the stock market keeps making new all-time highs, Bitcoin can go up. Notice, basically, this is the stock market made its all-time high in December and in basically January, February, and then here's the Bitcoin chart, right? And it comes down with the stock market. The only difference is the stock market's only down, what, 10%? Bitcoin on the, here is down basically 20. So you have to figure out that if the S&P drops, let's say another 10 or 15%, that could be 20 to 30% further downside on Bitcoin. Again, does it eventually mature into a digital gold, a safe haven? I think it does eventually. It's not at that point in its maturity phase yet as an asset. Okay, let's walk back to the big board here or the computer here and take a look. Let's go over gold. Gold continues to defy gravity. You got to be impressed with gold. I'm impressed. I was in the camp that when we started this pullback, we'd see a little bit more of a pullback. That hasn't happened yet. So again, we'll have to watch it. I'm curious to see, do we confirm above this level on the charts, right? So again, we'll watch that very closely. So here again, gold, this was that pullback right there. I thought would actually come in a little bit more, at least to this high. And it just shows the relative strength and the safe haven. And this is really a great example of safe haven buying, right? So you have the government debt, you have the Federal Reserve, the global instability, the inflation, all of these type of things. And it's just making money flow out of big cap tech and the markets and ultimately move into gold. And that's even pushing it above this line, which is very rare. Probability wise, this is about a 20% chance that it does this, right? 80% chance it does continue to pull back. So it's defying the odds right now. It's kind of like hitting the jackpot in this situation, but that's what it is doing. If we take a look at silver this morning, silver is down fractionally on the day. This has again been stuck down in this lower range. Again, not much going on that chart, still stuck between support and resistance. And then if we look at oil today, you guys know I've been starting to get a little bit more bearish on oil as the completion of the bear flag nears this upper flat trend line. So again, we still haven't touched it, but again, I'm looking for an eventual rollover breakdown and an eventual bigger breakdown on oil. I have not shorted oil yet. I'm still keeping it on my radar though, but I'll keep you guys posted. Now, this is a beauty here. So we talked about this on Friday. You had the topping tail, the breakdown, the bear flag, the drop into support, pivot right there, low there, triggers a bounce. Where do these bounces like to go? What did we talk about earlier? We said scene of the crime, right? Scene of the crime. Well, low, 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 consolidation, breakdown, retrace to the scene of the crime, and then that at least would be what I would expect per the chart. So I think there's a little bit more upside on natural gas back to this area right here, right around 450. We're at 425 right now, and so maybe another 25 cents up, and then natural gas probably turns down. You probably get a small bounce off this level here. I'll draw it in. So in general, you get a small bounce, and then I think we're headed down to this trend line right down here. So anyways, again, based on this, just to understand how I do this, it's basically knowing charts and having studied charts now for 26 years in terms of technical analysis. And it's always understanding that there's no perfect solution, meaning there's no 100%, but it's about what is the most likely outcome. So when I draw these lines, that's just my knowledge of studying charts of what's most likely going to happen. But as we see with gold, that doesn't always happen, and I think that's important. I'm glad it's doing it with gold since I have my long-term gold holdings, even though I have right now a short on gold overall. All right, on that note, I'm going to get going, guys. I got to get to the trading room. We're going to have a wild day of day trading in the Apex Live day trading room. Swing trade services probably are going to get some long alerts today as well. Thank you so much for tuning in. I appreciate it from the utmost of my heart here at Verified Investing. I'll see you later. Take care.